I don't really see sentiment entering into it in a sense, because they're not disclosing what they've got. And we run on a world of statistics now. So nobody has any gumption. Nobody actually sits there and thinks, it's quite likely that they have the following. That's not enough for a decision. You actually want to see the lies before you act on a government lie. So they're not disclosing the situation. I mean, they may disclose it at some stage, but I think in terms of the effect on the West, that is almost like placing a nuclear bomb under the Western financial system, which tells me that they won't do it, because nobody wants to get involved in a nuclear conflict, whether it's a monetary equivalent or the real thing. Apart from anything else, China has a lot of dollars. I don't know whether she's hedged them at all. I've been told by one economist, or it's been reported, an economist apparently stood up and reported that China has hedged most of her dollar currency. So I don't know whether that's right. It was quite a respectable economist, but I can't verify it, so I'm not going to say who it was. But it's, so we just don't know, I think, Tom. We just don't know really what the situation is. I mean, all I can tell you is that China introduced regulations back in 1983, appointing the People's Bank of China with the sole responsibility for managing the nation's gold and silver reserves. It was running capital surpluses. You had a mixture of dollars and euros coming in, or it was pre-euros actually, Deutschmarks and so on, coming into the country, which nobody in the country was allowed to hold foreign exchange. So this was inward investment coming in. That money was taken, and some of it, I'm convinced, was applied to the purchase of gold in that big bear market. When the factories that had been invested in started bearing fruit and exports from China started increasing, likewise, there were substantial inflows of capital. And this was really from exports coming in. And there was also the continuing flows of capital coming in to build factories and so on and so forth. So the People's Bank had an awful lot of dollars in the main to deal with. And some of it, as we know, went into US treasuries, but an awful lot of it would have gone into gold. And I've estimated in the past, the other thing that confirms this is that from 1983 to 2002, the citizens in China were not allowed to own gold or silver. And then suddenly there's a change of policy. They set up the Shanghai Gold Exchange. People were allowed to buy gold. And furthermore, the state advertised on television, run out and buy gold and silver. They actually advertised it. Now, that tells me that at that point, the state felt that it had accumulated enough gold, particularly gold, for its monetary purposes, even though it hadn't declared it. It then allowed its own nationals to have a go. And so far, the estimates appear to be that something like 17,000 tons have been accumulated by the nationals, on top of what I would estimate now to be 25 and 30,000 tons acquired by the state. Mm-hmm. Russia, when I talk to sort of people who are in the know, we're talking mixture of sort of finance and sort of quasi-intelligence sources. The suggestion appears to be they've probably got about 10,000 tons, some of which is obviously declared and on the Bank of Russia's balance sheet. So they are prepared for a collapse of Western fiat currencies. Of that, I have no doubt whatsoever.
Mm-hmm. So if let's say China were to introduce a gold-backed currency of some sort, Alasdair, what consequences would that have for the US dollar? Wouldn't they have to have it be more attractive to use for other countries to trade in to actually hurt the dollar dramatically?
It's a very complex question. I mean, the first thing that they would have to do in accepting or putting some gold backing into the yuan or the ruble is accepting that their currency will rise in value substantially over time against the dollar. So they will be reluctant to do that. And they'll be reluctant to do it for two reasons. I think the first reason is that they've got their eye on current trade and current trading relationships. And I think the second reason is that to a degree, the Marxist economists have accepted the Keynesian paradigm, as it were. So, they would think in terms of a competitive currency rather than the damage that a loss of purchasing power of the currency might do to the domestic, if you like, economy. So it is a complex issue. And I've always therefore taken the view that their acquisition of gold, potentially to back their currencies, is a fallback position. It is not something that they will, sort of immediately come out with at some stage to secure the position. But what you do see, which is interesting, is China in particular has moved very strongly to remove any speculation from within the economy. I mean, for example, the collapse of Evergrande was a consequence of that. I mean, people don't, they just think it was sort of, it was like a bubble going wrong. But it's actually a deliberate act of policy from central government to take the speculation out of the system. They've jumped down on shadow banking big time. And so you can see that they have been determined not to expose the country to the possibility of a shock from speculative unwinding. And they learned this lesson a long time ago, and they're not going to repeat it. I have to say that our Western nations are not in that position at all. We are very much exposed to a speculative shock. The Chinese in particular have taken great care to ensure that they are not vulnerable to that situation.